everybody, welcome back to Royal Blu FX. So in this video I'm going to actually go over on how I trade supply and demand specifically, because I know a lot of you guys have troubles out there with supply and demand, finding out which high and which low to mark out, obviously. So in this video I'm going to show you guys that probably in the next, this video will probably last for about 10 minutes. But I do want to encourage you guys to go ahead and subscribe to this channel for those of you that are new, because I always give out valuable content, obviously. And without you guys, this isn't possible for me to do, right? So there have been times, obviously, when I thought about quitting, but you guys are giving me the full steam ahead to go ahead and, obviously create more content for you guys. So without further ado, let's begin. So the way I see supply and demand is very simple. Okay, let me just go over here and draw it out for you guys. In fact, why don't we just go on 30-minute? Right there. Okay. What I do specifically is I just follow the swing high, swing lows, okay? And more importantly, what I do is actually follow and I look for the failed supplies and failed demands at all times, okay? Now, for those of you that are wondering, well, what is a failed supply and what is a failed demand, right? Essentially, a failed supply and a failed demand is when price fails to break a new low or a new high, right? So let's take this for example here, or this one right here. You can see right here and right here, right? Prices are failing. There's a failed supply, right, that wasn't able to break this low, and then price reversed, right? Just went bullish, right? It actually faked everybody out thinking that price was going bearish, but in fact price was actually going bullish. Same thing with this high, right? There's your bearish move, supply was going bearish, right? There was for some reason prices a lot of traders are thinking the price should go bearish, but instead it went bullish. So it's really simple to understand, but obviously a little hard to apply. I'm going to show you guys right around here where price starts to get a little bit interesting, when price is at its maximum or all the way in the premium, should I say, right over here, and we hit a supply zone, we anticipate that prices should reverse, right? And so in this case, what I'm looking for, the very first thing to do is look for a flip. A flip is essentially a failed demand zone, right? So when you see this here, right, this demand zone where prices are rising high, then you have prices here coming to this demand, and a lot of traders anticipate that prices should actually run bullish and break this high, which in fact prices go bearish, right? So this is that very first move that I always anticipate and look to take advantage of. This is that flip. There's your failed buy to supply, right? So if there's your failed demand zone here and then supply took over, guess who's in charge? Supply is, right? So then we would look to mark out that supply zone and then continue bearish. So in this aspect here, okay, if we have a major supply zone here at this major supply, right, zone, then in theory everything should go bearish, right? We should see every demand zone fail, okay? In theory, every demand should fail because the major supply is taken over and the internal demand is weak to take price bullish, right? So now we're looking at the supply, the internal supply, which is here, right, and here, to take price even lower, right, to respect the major supply zone, right? So in this case, if you look at the supply here, we see that there's a failed supply to demand, right? Now, what I would anticipate is wait for prices to get back to this supply, because that is the next supply zone to take price bearish, right? In any case, we know price isn't as smooth as we always like to be, right? Because you can always get something like this, right? And this is where it can get a little iffy, sort of to understand and read price, right? Now, because everything is fractal in the market, right, we can maybe look at this in terms of sub and minor structure. Minor structure going bullish like this, right? And then substructure going bearish, right? Then we know that the major structure is pushing bullish like this, and major structure is going bearish as well, just like that, right? So if price is fractal, which it is, right? And if we understand that this is substructure going bearish, what can possibly this be, right? What kind of structure could this possibly be? Well, there's that microstructure, right, that comes into play. Microstructure did not come and mitigate that sub high that we all wanted, right, for price to get to take price bearish, right? So in this case, substructure right here is, microstructure over here is acting as a form of liquidity for prices to go bullish eventually, to come and take out that excuse me, to come and mitigate this substructure high here, right, for prices to go bearish, just like that. Okay, so a lot of you guys can get confused when this happens, obviously, but rest assured, whenever you're looking at a major high and a major low, and whenever you're looking at structure, always look at the structure inside as sub and minor. So this is minor going bullish, sub going bearish, and anything in between sub and minor is your microstructure, right? So you'll get microstructure going bearish like this, bearish, right? Then you get microstructure doing this, right? And then obviously we anticipate that prices should go bullish here, right? Now everything is not picture perfect, obviously, but we want price to come here, right, with the micros, right? And then to continue microstructure bearish, just like this, right? As you can see, prices sometimes start to expand. You know, they expand over time. And what I mean by that is when you see a form of imbalance like this, right? Let's just picture that all this is in balance. Price runs up, price comes back down, right? Shows all this imbalance, right? There's most likely a wick that we like to, excuse me, let me just delete this. There's a wick that price forms all the time, right? Something like this. And now I'm going to show you on a live chart example, obviously, but it's something like this. It wicks, right? Price runs, right? And then now you're thinking, well, where am I waiting for price to get to, right? Well, this would be the next supply zone right here, right? Now let's just say that mitigated, right? And then now what I would anticipate is for price to get back to that wick right over here, right? Just like that, right? So now what I'm looking for is if prices are giving us something, you know, an internal structure like this, this would be your micro tapping into the sub high right here, right? And then we wait, excuse me, this is terrible. Then we wait for prices to obviously continue bearish, just like this, right? Just like that, right? Switching hands, right? Switching structure, whatever, to take price bearish, right? Now, after that move has happened, now this is what I want to show you guys. When price is expanding, right? Prices can just do this the whole time, right? Making a larger expansion, just like this. It gives you a lot of consolidation, right? Price comes into the supply zone, just like that, right? Now, what I'm anticipating is, now, let me just delete this here. Hold on a second. Why is my screen not moving? Because of that. Okay, maybe not. I'm not able to move the screen, guys. All right, maybe I can move this whole thing to the left. I hate when this happens. There we go. Okay, so for instance, okay, notice how if price was all in balance, right, and probably mostly just wicks, right, just like this, okay. You guys have probably had a scenario like this, which I will show you on a live chart, right? And prices start to expand. Do this, right? Do this. Now go back to here, right? Notice how there was this huge impulse, right? Going bearish. And then we had wick to go and mitigate, right? Price came down. Now we have all this expansion coming back in, right? Then there's more expansion coming in this way. Now, I know you can't see all that, but something like that. Okay. Anyway, yeah, so, and that's what I meant, that's what we are dealing with here with supply and demand. Now, supply and demand isn't picture perfect, obviously, but what you need to be looking at here, guys, is understanding that every demand has to fail when supply is bearish, and every supply has to fail when demand is taken over, right? So if we had something like this, a scenario like this, notice how supply came in, then demand came in, right? Took over supply, right? Price will come back into the demand zone right here and then continue bullish, right? You can see there's a failure of supply. The price left and then price ran up, came back, and then continued, right? Now, if price is bullish, where's the next failed supply? It's here, just right here, right? So now we wait for this failed supply to come in here to continue price bullish, just like that, right? So I'm going to go show you guys on the live chart example how I do it, and then we're obviously going to talk about it, so you guys can see what I look for in supply and demand. So just off the bat, I can already see things here. You can see already there's our last supply zone right there that got mitigated, right? All I'm doing is following the highs and the lows, right? You can see here, there's your failed demand to supply, right? Right here is your actual demand, your supply zone. Now I know some of you guys may think, well, yeah, well, isn't that just a inducement? Yes, it is inducement. However, when you go take a line chart, you can see that this is actually the next high that price needs to come in. Now sometimes price does get above those supply zones, right? We can never always time everything right? We can never time all the supply and demand zones correctly. We can never anticipate when price is just going to go above. This is why I always use that 50% like this, right? And always put my risk just above the 50, so that way I don't get stopped out. You know, my stop loss isn't swept, right? I don't enter right here at the zone right there because now I'm over risking way too much, right? So this is why I would do something like this, right? Let alone maybe even go at that high just so I can avoid getting stomped out, right? And then I will look to target this low. So let's get out of here, right? And then next you can see, obviously, this is the next supply zone right there. A lot of you guys might look at this and say, okay, well, now it's consolidating, right? This is just a range and you're just trading consolidation. I'll tell you this, guys. Whether it's consolidation or whether it's a smooth break of structure to the high or to the low, it's all the same thing, okay? You just need to read price correctly. So in this case, you can see prices are going bullish, but also prices are going bearish. So in this case, right, if I would want to trade, if I want to enter here, I wouldn't enter here immediately. The only reason why is because we're not bullish just yet. Even though in this low right here, this demand zone hasn't actually broken that supply zone, right? So we're not really we're not bullish yet, but in any case, that doesn't mean that price can just start running. So what I'm going to look for here is evidence where price has failed. You can see just right here, there's supply zone right there. Now I'm using the fractal part of this, making sure that I'm on the 30-minute time frame as the higher time frame, and I would go down on the 1 minute to enter this. So this is why I'm using the microstructure now to look to enter. Okay. Oops, let me get rid of that. Okay, so let's see what happens here. Okay, price actually took us out based on, it didn't take us out, excuse me, but it swept the high, so there's no way I could have actually even entered this at all. Well, actually, no, this is actually the correct supply zone because we did have a break structure here. Okay, this is where the fractal part comes in, right? Where it's, you see a high in here, but there's also a high there, right? What we're looking for is to target the previous failed demand, which is right there, right, to supply. So I should have actually targeted this. This would have been an entry, actually. But let's continue here. We have another failed buy to sell here. This will be the next supply zone right here, right? Just like that. Right there, right? So that would have been an entry going bearish from here to here. Now, I wouldn't be on a 30-minute, obviously, it would be on the lower time frames, but we're just showing you guys what it looks like. And from here, we can look to start targeting the low here. Now, I know we're all the way, you know, all of this is consolidating, right? So I'm not looking for a picture-perfect price to actually go bearish all the way down, right? So at minimum, I would only target this low right here, right? Something like this, right? Just to be in and out. You don't want to be greedy. You just want to be in and out, right? So the next entry would be right here because now we're following prices bearish, right? There we go. Look, see, what did I say? Prices took you out, right? In reality, this would have been my actual entry at the 50 right there, as you can see here, right there. Price didn't go above, right? So I'm covering the high. Would have targeted this low at minimum, right? Just like that, right? So let's continue here. We also have this supply zone here. Now this is where the major supply zone is. Look at that. There's a major high, major low, major high, major low, right? Inside of our major high, major lows, there is your sub high, sub low, sub high, sub low. Right now, the sub high here was broken, right? Which is all liquidity. The substructure just created all liquidity for the major structure, right? And this is where we would see if price can respect to go bearish. Now, I'll just take this obviously just to show you guys. Normally, I wouldn't be taking trades immediately like this, especially on a consolidating zone or area like this, right? But this is what we would do essentially. And I would look to target at minimum, not the low here. Actually, no, I could target this low. There's two different targets actually. One of the targets is actually, well, first of all, one of the targets is here because there's a huge possibility price can just start reversing, right? But another target is this low, and the last target is here. So there's actually three targets, right? So at minimum, I want to target this area here because this is where the last supply failed for price to go up. So let's continue here, right? Let's see if price can come up. Okay, price actually did not come and tap us, so therefore prices are bullish, right? I would actually look to take buys here just to take price bullish here. Let's see if price come over. No, they haven't, so we haven't even actually gotten tapped. This is out of the picture. It's kind of funny how this works, right? This is left as inducement for the markets to come and sweep us above, just like this, to go bearish. However, I still want to play this next supply zone right here, because this, to me, when price doesn't come inside here of the zone, it's not mitigated, right? It's left as inducement, right? So if it taps the surface of the zone here, that's not a mitigation. The mitigation comes when price gets in the zone, or at least goes into the 50, and then I can take price. So for me, this is still not mitigated. However, I can still look at price when price actually gets here and look for confirmation. So let's continue from here. Okay, price just went below. It plummeted very nicely. So I'm still going to wait for this supply zone here until microstructure in here, or substructure, actually starts creating. Let's continue here. Okay, there's nothing so far. All right, so all of a sudden I can see something here on the fractal side. Notice how price ran up, started going bearish, right? And we can start seeing that the microstructure here is actually weak, right? So we can actually look for sells right there. Okay, well, this actually failed, so we're going to take that out, right? We're going to wait for price to get bullish. Let's see what if we get anything here. Hold on a second. Prices are rising. Right to where I want price to get to. Boom, right there. Now I got to be mindful of this area here too, because prices could actually come out from afar. So in fact, I'm going to look for confirmation at this supply zone here. Okay, this hasn't. Oh, this is a breaker right there. Hasn't fully tapped yet. Right, it's still at that surface. Notice how that's at the surface, right? Okay, there we go. So there's a sign here. It tells me there's your failed demand zone. Price is not going bullish. So prices are actually reversing. Okay, I think I might be a little too late on this, but I can still catch it here. Right here, because you have buy to sell there. Let's see what happens here. Nope, price is not doing so well. Okay, there we go. This is not good. Not good yet. Okay, boom, price took me out. Okay, so in this case, I'm still interested in selling here. Let's continue here. Okay, let's see what happens. And there we go, guys. Right? Just as expected. This is where we wanted price to get to. Right there. To take price bearish. Now, let me just talk to you guys about what I'm doing here. Okay? Not obviously, not every micro in here is going to work, right? I'm not necessarily... let me get rid of that. Every supply and demand here with the microstructure is not always realistic in terms of looking to be taken, right? What we need to be looking for is the main structure. There's a low, there's a high, there's a low, there's a high, right? Right over here you can see that there's that failed demand to supply. So realistically, this is that next supply zone that looks that we wanted for price to get to, right? For price to sell off. Now, I would have probably actually done something like this. Something like that, right? And then cover that high. Notice how price actually, I think it actually even came up a bit. Yeah, look, price just came above right there, right? So you could have played either way, right? You could have either played this high here or this high, but I normally try and keep everything more generic than, you know, very meticulous. Like to say, okay, well, that's the order block. That's exact order block price is getting to, right? I don't do that. I try to keep everything generic. There you go. Takes out the 50, right? Or mitigates, sweeps above the 50. I would put this just a bit above, maybe even here just to cover my high, right? And then take the entry there. That's what I would have done exactly, right? Let's look over here. You can see that there's your buy right here that went right above here, right? That wick. So obviously that's not our failed demand. The failed demand comes into here actually, which is this low that fails to break the high. So this is where I would actually look for prices to come into right there. Let me clean that up so you guys can see that a little more clearer. Okay, notice again how prices get up right here. Prices go up, come down, go up, fail, right? Demand fails because demand is supposed to go above the high, but then it goes down and then comes right back up right there for the sell. So that would have been my entry right there. Then we see more failed demand to supply, so I would wait for this area, and this is where we need to start. Adapting to the new structure, which means if price doesn't get to these supply zones like this, okay, and you see price coming down like this, and you see that this low did not go above here to mitigate here, we need to wait and start adapting to the new structure, which is here now, right? You see this failed demand to supply. Price came in for the sell, just like this. Now, why would we be selling here? Because the major supply zone tells us that we should, right here, the major structure does, right? So this is what we would do. All right, let's continue to the next one. I'm going to show you guys one more example, okay? Right here you see the failed demand. This could also work out like this as well. Okay, there's just different scenarios you can look to enter price. This is not in here. There's no failed demand. Actually, I'm lying. There is right there. I see it right there. Okay, and then here's your demand going bullish right here because it's a failed supply to demand, which means price is going to run up, right? And we're looking to see if prices could sell off here. Now this won't work out because we're obviously way too low in price in here. So I would in general just avoid this unless price can respect this high and show me a shift in the market here. Okay, usually when prices are bearish in the discount here, I don't start taking trades down here. I want to see if price can give me some confirmation in here, like the failed buy, the failed demand zone that can't break above the high. If I see that, then I'll strike. So let's see if that actually happens. If it doesn't, then we'll avoid it all in general. Okay, I don't see anything here. Here's that failed demand right there. Here it is, guys, right there. So now this is my evidence that price should just go bearish, just like that, right? You see, this is that trick that I always do, right? So, okay, price did respect this high, obviously. There's two things. Prices are going up, right? I could strike here like I wanted to. However, I saw this one internally, right? What I'm trying to do here is show you guys that just highlight the generic last supply, last demand, which is right there. That's your order block essentially, right? I'm not trying to get so refined like this and trying to enter there and wait for price to take me out. No, I'm really trying to just mark the generic area where price can get to and mark that 50 for price to go bearish, right? Notice how I was telling myself I could enter here, but then I was looking to see where the failed demand is. There's that the first failed demand, which is our flip, right, to supply. There's your entry, done, right? And at minimum, you could target here, obviously, or whatever. Now, obviously, this is the 30-minute, but if it was on 1 minute, I'd just target the slow. However, we can look to target, each supply zone, each demand zone has to fail. So there's another demand zone there, right? We could look to target this low down here, something like this, right? We got to be careful to see that this demand zone isn't actually, selling here with another supply zone. But let's actually look at here. Let's be a little more realistic. Let's go. There's another demand zone right there I could target. And the last one would be right there. Okay, so there you go. You guys can already see that price already came to that demand zone. Now the reason why I'm targeting these demand zones is because there's buyers in here that are thinking that price is going to rise bullish, right? So I got to be careful, obviously, and follow my instincts here. And it's fine if price gets to this demand and starts running up. You just need to monitor it and either cut your trade off here or something like that. Okay, I can also monitor the trade here, right? If I don't have price running bullish, I need to see a failed demand zone, which means price needs to run up and then fail, right? That will indicate that prices are weak here on the demand side and supply is taken over. Like right now, you can see failed demand to supply. So now I'm still going to stay in here, right? Let's see. Okay, this is not. Okay, now this is the microstructure. Here's the substructure now, the minor structure pushing bullish. If the minor fails like this, then by all means, I'm still bearish. I'm still going to be in this trade. Right, let's see. Oh, look at what happened, right? Price actually comes back to the supply zone. And had I stayed in, boom, this would have happened, right? So there you go, guys. That's what I'm telling you, right? Always be, always be aware of where you need to target, right? This is why I look to target this demand zone, because there are traders down there that just think it's a buy, and they just buy anyway. All right, guys, I hope this was a little educational for you guys. You guys understood what I was talking about, right? If you have any questions, please leave them down in the comment section below. Until then, guys, I will see you in the next video.